Hi, and welcome to another episode of Money Ministry. I'm your host, Craig Mack, and today we're going to continue with our series on this will be the final um, segment of indicators, technical indicators. So, what we're going to do is get started with that. But before I do that, what I'm going to do is I am going to try to establish my credibility with you. Just give me a second here to get set up. There we go. All right. So here for the month of April, I don't think I did on my last episode, but the month of April, you can see that as I track my daily progress or gains in my portfolio, I had a total gain of $4,391. Okay, which is much better than what I did in March. March, I lost 933.28, but in April, I got it all back and then some, which is why it's important that when you buy your stocks, that you don't panic sell and overreact to fluctuations in the market. Okay. And as far as my portfolio, oh, wrong thing here. Hold on just a second. There we go. All right. So year to date, since January up until May 3rd, which was yesterday, the taping of this video was May 4th, I have a gain of 22%. And I have outperformed the NASDAQ and the S&P combined. Okay. I've had a gain of $4,572.27 since January. Okay. And over the past 3 months, I've had a 17% gain. Again, I've outperformed the NASDAQ and the S&P. I've made $3,800 over the last 3 months. And then over the last 12 months, I have a gain of $15,263.13. I have a return of 94%, 94.27%. Okay. And then for the last, since 2023, when I had my account set up with Charles Schwab, I've had a total gain of $27,281.15. I've had a $212.34% return, which I have completely outgained the NASDAQ and the S&P over the last 3 years. I have an average I have an average return of 58% as a return. So hopefully I've established that helps to establish my credibility with you. And so that for that, we're going to move forward. For those of you that are new to the channel, I give that information so that, again, so that I can establish my credibility. Each episode that I've done, it builds off the previous episode. So if you have not been with me from the very beginning, if this is the first time you've tuned into this particular channel, I highly encourage you to go back to through the playlist for Money Ministry so that you can get caught up on all the things that I've covered, and then this content will make a lot more sense to you. Okay. Also, don't forget to hit the like and subscribe button. That will really help me out. And also, you'll be notified when new episodes are published. I have a book that's coming out. More to come in the next couple of weeks on that. It's currently in production. And as soon as it is posted to Amazon, Books and Noble, and every other place that you can buy your books, and it'll be an ebook form and also be in paperback. And then hopefully soon it will be in a audiobook format. Okay, so more of that to come. But for today, what we're going to do is we're going to move forward with the understanding the accumulation distribution 80 indicator, better known as, and it's a value-based insight for smarter traders. Okay, again, for those of you that are new to this channel, I put this information in a PowerPoint slide deck format so that you can stop the video anytime you want to read through the slides. I'm not going to read the complete slide, but it's for you to be able to look at it at your own pace. I kind of summarize what's on the slides, and then that's it. You can learn at your own pace, but it's there for you to be able to learn and understand. Okay, so we'll move on to the next slide here. There. Okay. The AD. Okay, it's a value, it does volume analysis, but the most important thing that I want you to get out of this is that it judges it gauges market sentiment. By market sentiment, this indicates what institutional buyers are doing with the particular stock or index that you're looking at. Okay, it lets you know if the institutional buyers, your big investment houses, are they buying the stock? Are they selling the stock? You want to go with the money. You want to follow the money. You want to do what they do because the high volume that they purchase or sell affects the price action on the stock, okay? Because of the volume. They do, they buy 1 million shares or something, that can make the price go up. If they sell 1 million shares, it can make the price go down. So that's the main thing that I want you to get out of this, okay? What are they doing? And you combine that with the under indicators that I've gone over in the previous episodes, and you you gather all that information together to come up with what you think you should do with that particular stock index that you're looking at. Okay. But that's the main thing I want you to get out of this. This shows you what the big dogs are doing with the stock. Okay. Mark Chuckman, you may have seen commercials about him uh, on CNBC. There are several indicators that he developed to help investors get a better understanding of what the price action or what the market is doing. Okay, so that's who created this. Science behind it. Core principle is based on volume. Volume increase stays when price moves in the same direction. It also gives you an idea of the psychology of the market. Are they buying or selling? Okay. This is mainly focused on the institutional buyers. All right. All right. The next one. Okay. Overlay. Accumulation phase. Notice how the AD rises with price during periods of strong buying. So if it's going upward, that means that it is people are buying. If it's going downward, that means that people are selling off. Let's see if I can pull up an example for you. We'll just use the S&P as an example. Pull up the S&P. Okay. Now, the other thing that I want you to understand is it is best to use the 10-year charts. Okay. The 10-year charts decrease the chance of you getting false signals from the market, and it doesn't necessarily fluctuate because it charts 10 years of data. So that's a bigger population that it determines its trend from. So that's why you want to use the 10-year chart when you're using your indicators so that you can get a better feel, a more accurate feel of what's going on in the market. Okay, here's your accumulation distribution line here. Okay, so right now, this is showing that there was an increase in institutional buying, right, for the S&P. Now, you couple that with your other indicators, here your stochastic is showing that it's in the overbought territory and it's starting to curl downward. And then your MACD had a bullish crossover here, okay? Whether or not that is sustainable, we'll see. And then down here, you have your relative strength indicator, which is flattening out, okay? So it's kind of a mixed bag. And then if you look at the top here at your candles, you got a hammer here, but you have a slight hammer here. So that indicates, and then we had the news to come out that things are starting to heat up again in the Hamas Strait between Iran and the U.S. and Trump and all that. And so there's going to be some probably some selling off. People are going to panic again and start selling some stocks. But what you have to keep in mind is that when stocks go down or when there's a sell-off, it's opposite of what you would normally think. It is not a time to sell, it's actually a time to buy. If you have done your homework on your stock, gone through the fundamental analysis, you do your technical analysis, and you have determined that you have a good stock and you may have got some profit off of it. That is not a stock that you sell. when the price goes down. You have to think of it like as if you went to a store and you go to the sale rack. Well, your stock is on sale, so you buy more of it. You've already determined it is good. The fundamentals are good. The company didn't do anything wrong. It's just that the market is going downward, but the company didn't do anything wrong to cause itself to go down. So you buy more of it, and then when the market rebounds, then you make more money because you have more shares. Okay. So that's pretty much how it works as far as what you do when the market goes down. But right now, the S&P is kind of going sideways right now. The accumulation line is kind of flattening out. They haven't sold, the big institutions haven't sold yet, but they're not necessarily buying right now. So they're kind of like in a wait and see mode. Okay. It's wait and see time right now. Okay. And again, if the AD falls, then that means there's a sign of weakness and that things are slowing down. That's basically what you need to get out of this. Okay? Okay, again, the price goes up and the AD is going up, that's a strong bullish signal. Opposite is true when there's a sell-off. Falling price, falling AD, strong sales pressure. That's what that means. Okay, the power of volume accumulation. Okay, it's the volume again. The institutions, when they're doing a bunch of volume buying, okay, they're buying in bulk. They're buying thousands of shares of something, a stock or an index. That is what impacts the price. Okay, so you want to keep your eye on that to see what they're doing. Okay. Divergence one of weakening trend. So, watch at least 2 to 3. If there's a divergence, meaning that, it's going up, but volume is going down, then that means that's called a divergence. And you just want to keep track of that. You want to pay attention to that kind of action. And again, that's why I tell you to use your 10-year chart because you have less likely a chance of that happening. When you have shorter periods, then you have a chance of having false signals such as this or divergence might pop up, but you want to use your 10-year chart because it tends to be a smoother chart for you to be able to make your determination. All right, you can use it to do long-term entry positions, avoid false breakouts. Again, using a longer-term chart helps you to avoid any false breakouts. And again, you couple that with your other indicators, like I showed you, demonstrated earlier. You use your stochastics, your MACD, launcher candles, and so forth. Whatever indicators that you use, you also factor this in as well. You always want to know what the larger institutions are doing. Okay? All right. Advantages and limitations. Advantages, it's heavy on the volume weight. Okay, give you value weight insight. Hidden pressure detection. Tool analysis. It's a tool analysis, a trend analysis tool rather. It's a leading indicator. Limitations, false signals. Again, by using your 10-year chart, you kind of take false signals out of the equation. Requires confirmation. Never use it by itself. It lags is usually a day behind. And then market context dependent. Okay. Okay. So let's summarize. All right. Volume, it has a volume price relationship. Okay. It's a trend confirmation tool. It studies the trend of what's going on between the price and the volume of large institutions. Okay. So if you master this indicator and use it with your other tools, you'll be able to make better investment decisions. Whether to sell, whether to buy, that is what this will help you do along with your other indicators. Okay. So that's pretty much it. This concludes our technical analysis segments. Again, I highly encourage you to go through the playlist because I've gone through a number of indicators that you can use, that you use together. They all work together to help you make better investment decisions. Okay. So I'm Craig Mack. This is Money Ministry, and I'll see you on the next video.